The Metaverse is emerging as the next big technology platform and promises to become the next frontier for human experiences on the internet. Into the Metaverse covers companies, technologies, and trends that are bringing this promise to life. Join thought leaders Matthew Canterman, CFA, formerly a senior analyst at Bloomberg Intelligence, and Jonathan Raz-Friedman, founder and CEO of Super Social, as they interview the brilliant minds building, shaping, and investing in the Metaverse.
Welcome everyone to episode 7 of season 2 of Into the Metaverse. Today we are diving into venture investing in gaming and the Metaverse and the intersection between the two with a really stellar guest, Angela Dalton. Angela is currently the CEO and founder of Signum Growth Capital, a registered broker-dealer that provides advisory services to companies focused on mass market applications underpinned by Bitcoin and other blockchain protocols, video games, tokenized digital art, and social network, striving to be really at the forefront of emerging technologies and digital economies in the Metaverse. Aside of that, Angela also has 20 years of experience in capital markets and has served as managing director in 3 investment banks, UBS, Evercore, and Guggenheim Partners. Angela is also an advisor to ARK Investment Management and a venture partner at Griffin Gaming Partners. Angela, welcome.
Thank you. Thank you so much for having me.
And now we have a short announcement from our friends at Roundhill Investments.
This podcast is brought to you by Roundhill Investments, the advisor to the Roundhill Ball Metaverse ETF. The Roundhill Ball Metaverse ETF, which trades on the New York Stock Exchange under the ticker symbol METV, is the largest dedicated metaverse fund in the United States. The ETF tracks an index developed by Ball Metaverse Research Partners, a metaverse-focused indexing and research company headed by industry expert Matthew Ball. For a prospectus and more information, please visit roundhillinvestments.com/ETF/METV. Read carefully. Investing involves risk, including possible loss of principal. Investors should consider the investment objectives, risks, charges, and expenses carefully before investing. Distributor Foreside Fund Services, LLC.
Great. So, Angela, we have our favorite first question for all of our guests as we seek to build a consensus of the ever-evolving definition of just what is the Metaverse and what it is not. And so to you, to your colleagues, and to the firm you're building and the companies you support, what is the Metaverse in your mind? And also, not less important, what do you believe the Metaverse is not?
So what is the Metaverse? So I've thought a lot about this, obviously, and attempted to come up with our own definition. And I think of Zoom as the first application that really, I always say we were zoomed into the metaverse by COVID. And it's really the first application that is where we have this experience with a group of people where we have multi-sensory activity going on. And so that's what prompted my definition, which is the human multi-sensory understanding of authenticity. And the reason I say authenticity is because I think that it's important that in the metaverse, many senses are going, because your brain can trick yourself into thinking that it's actually more real or more, analog. And we've all had this experience where we run into somebody that we have only met on Zoom, and then we say, wait, have we only met on Zoom? How is that possible? And so that's really it. Just furthering that, I think it's really where kind of these normal online, where normal daily activities that are conducted between people working, playing, communicating, and we're bubbling, where economies are bubbling up.
And when you talk about that sensory element, how do you think about that sensory connection when a lot of us are experiencing the metaverse, or are going to experience the metaverse really through the lens of these avatars? How does that add or subtract from the way you think humans are going to experience connection and play and other forms of experiences on the internet?
Yeah, so we've experimented with this a lot. About a year and a half ago or so, we created the Signum Arc Gallery, which was a collab between Signum and Arc Invest. maybe it was a couple of years ago now, but regardless, we set up a gallery in Decentraland and one in CryptoVoxels. We all, of course, created our avatars, and it was, I talked about this with Philip Rosdale. He's a big inspiration to me in the metaverse, having created Second Life, and in the beginning, when we had our Decentraland avatars, it was really kind of fun. We had Discord going on at the same time. We would, have these discussions inside these spaces with our avatars, and it was fun. The cartoony avatars, I actually think are, I think more useful than the realistic ones. So I ended up evolving my avatar to a super realistic avatar that I got really excited about, and I decided to use it for a week only, and not join any Zooms without my realistic looking avatar. And it just felt creepy. And I think that that's just the uncanny valley, that we talk about, where ironically, Zoom, again, I'm talking about Zoom, but Zoom has leapfrogged some of these technologies, because we ended up doing our last session at Signum Art Gallery with Zoom running at the same time so that we could see each other's faces, because it's like, why wouldn't we see each other's facial expressions if we can? So I think the avatars are fun, but I think seeing facial expressions that are part of people's actual faces is really important.
And you've mentioned Philip Rosdale, and one of the episodes that I really enjoyed listening, a podcast with you and Philip on the same podcast episode, I remember there was a lot of conversation about voice. And one of the things that we're starting to see, for example, on a platform like Roblox, is Roblox integrating spatial voice technology to really complement that avatar interaction. And when I play a lot of games on Roblox and others, me and my friends always also have a Discord open, right? And where we talk and also can see one another while we're playing as avatars in these virtual worlds. And so I think there's something there around also the connection that we humans have through voice, and that really contribute to that realistic feeling without necessarily having those photorealistic avatars that you've described, and the whole challenge of the uncanny valley. So that's a really great call out. I wanna add one more element to the metaverse question, and I think you are among a few people really qualified probably to address that point, which is, how does Web3 technologies and the decentralized internet play into your point of view and definition of what is the metaverse?
So I think Web3 technologies are extremely important, because I have a pretty strong view that advertising, which is really the bulk of what drives Web 2, especially in a social context, is a human conflict of interest. And it's an unnatural thing between me and what I want to consume, who I want to interact with. And by definition, advertising is meant to obfuscate, convince, change my views. I don't always know where things come from. I don't always know all the sources. I don't know the biases, et cetera. And I think Web3 is extremely important in that respect. And I was actually really excited because in Davos last week, so we advised the Web3 Foundation on the launch of Polkadot. We've been working with them since 2019. And I was very excited and inspired to listen to Gavin Wood and Frank McCourt talk about a new Web3 social media network that removes a lot of these conflicts of interest.
Interesting. We will share some links afterwards to check the Polkadot project, which I know you're involved in. So Angie, let's switch gears and talk a bit about more Signum, right? Because you are focused on companies that are striving to be at the forefront of technologies and economies in the metaverse, and obviously that is very broad and encompasses a lot of different things, from data center architecture to semiconductor infrastructure software, to consumer platforms and application, as well as payment and economic systems. Which area in this wider stack of the metaverse economy is the most exciting for you as an investor? And are there any areas of this nascent space that you are more cautious about?
Well, they're actually related. I am the one that I'm most excited about, and also the one that I think is that I'm cautious about right now, which is really this. The reason we started Signum. So I was at Guggenheim Securities, and I was doing all things emerging. I had a very long history in video games, and was the first kind of Wall Street esports analyst, and was very excited about all things, new technologies in esports. And I really, and I met the gentleman who finalized the ER721 standard, William Entricken, around the same time. Well, actually, it was maybe 6 months after I had listened to Tim Sweeney give his vision of the metaverse. And it really dawned on me that I had spent my whole career thinking about advertising models and, internet scaling and then separately video games, which was always kind of viewed as the stepchild of media. I mean, really, there weren't that many people interested in video games. I mean, in terms of, traditional Wall Street analysts, bankers, et cetera, until very recently, even if they even are now. And I think that what I'm really excited about is the fact that, for years and years, we've seen, $160 billion-ish being spent on TV advertising. And if you look at the industry estimates, they still are calling for $160 billion a year of TV advertising. And meanwhile, no one's watching TV. Those living rooms are empty. And so I think of the TV screen as, a window into engagement. We used to think of it as that, and I think brands still do. And I think the NFT has a real potential to be a new window. And that window, on the other side of that window, is actual engagement. And most of that engagement is in games and people having fun and kind of true leisure and entertainment time. And so then you ask yourself, wait a second, you just talked about advertising. You also don't like Web 2 advertising. And also, by the way, gamers hate advertising. There's been many waves of money-making schemes that have tried to get their way into to find their way into games, and gamers really don't like it. I mean, they just want to have fun, and they don't like the idea that there's like, you keep your money-making thing out of my game. I just want to have fun, and so the reason I'm excited about NFTs is because for the first time, you can see a brand actually embody a character or an item, and those items create social capital for the players themselves and identity for the players themselves. So again, it goes back to authenticity. Authenticity is extremely important. And a great example of this is, Mythical, full disclosure, we're investors in Mythical and been investors since the early days of the company. And they launched the first luxury branded game asset, which was called Sharky. It was a Burberry character. He has armbands that are Burberry, and he's got pool shoes, and these the character and the armbands and the pool shoes, sold out immediately. These things list and they sell very quickly because it's not a banner ad in a game. It's not a product placement that is trying to obfuscate or trying to sneak in there. It's actually a character that I want to associate myself with. And so that's, I think, what I'm really excited about. Another one of the epiphanies when I was speaking to William Entricken back then, when the lead author of the ERC721 standard, was I want to take my Gucci bag with me from the holiday party to the Mario party and back. And that is, kind of in the same vein of what I'm talking about. I'm really excited about, again, not advertising, but just true engagement and fun. And the idea that creators, brands, of these NFTs or of these assets, one, move to the front of the line because they take more of the value creation. The food chain of value creation is more transparent. and because these assets are more authentic.
So this is a really fundamental point, and I share your belief about the value of NFT as almost like a living organism that continues to evolve. It's almost like an infinite possibilities to dive deeper and bring more life into each of those NFTs, not even just NFT as a collection, which is much, much broader, but even the individual NFTs in the hands of the right owner. And we're starting to see that already because of a lot of NFT projects provide the commercial ownership or the IP rights to the owner of the particular NFT and the things that you can do with that. And I think it opens up immense possibilities for brands to become more open, more inclusive of the community. And instead of looking at community as customers who just need to purchase more and more of our items, brands can start looking at consumers as actually proactive contribution to the value of the brand, and can create with the brand and create new things around the brand that the brand may not even done by themselves. And because of the involvement emotionally, transactionally, and the sense of ownership that people have because of the way NFT can be architected. And so if we double click on that consumer application layer for a moment, one of the things that, we believe we would like to see in the metaverse is to break down the power of these walled gardens to enable consumers and creators a greater degree of expression and contribution and involvement, as you've mentioned earlier. And so from an investment perspective, walled gardens like Facebook, Meta, Google, Apple, Tencent, et cetera, they've all created enormous enterprise value since their inception, in part by becoming a walled garden in the quote unquote Web 2 era. How do you believe we bridge the potential dichotomy between the egalitarian aspiration for a decentralized metaverse with all of the empowerment that is associated? How do we balance that with the investment value proposition because of the financialization of the internet?
So that's a really, really good question. I think about this a lot because I think that Web 2 embodies this idea of zero-sum game. And it feels that we're heading out of that era of zero-sum game and into this era of stakeholders. And you described it in different words when you started that what you just said, which is, I have a pretty big screen in my head as an investor for Web 2 companies that are just getting into Web 3 by taking their celebrity, taking their XYZ IP and creating a new revenue stream out of NFTs and saying, oh, well, we have, so-and-so. We can do that too. We can make more money selling NFTs. That's not the thing. It is really about bringing new stakeholders in and giving up power so that the community can really influence the direction and actually help you as an entity. And that's a really, really important screen for me as an investor. I think about the idea of, the Web 2 world, the Web 2 venture capital world, if you want to call it that. It's like there's this company in this circle, and there's all this venture capital money pouring in, all the people doing the work and the value pouring out and going right back to the investors. And then meanwhile, the workers are just working away. That's over. And I think what is really exciting about the future is that this concept of a DAO. Now, I think that concept will evolve, and I think there's some, clear, challenges to it. Some of which are regulatory, but I think that the concept is brilliant, which is take that same circle, all of these participants that are working to create value. If they buy in to this, entity in the first place and have a common goal and do the work and create the value, they should take the value out. So this idea, this kind of, it's a combination of the future of work and the idea that the zero-sum game is over and the and the new model of stakeholders is alive and well. So those are kind of the screens that I look for in investments. And I'm very sensitive to kind of what I call Web 2 pile-on, which is people who are just like seeing the money and going for it. And I just think that, going back to your earlier question about what I'm cautious about, I'm cautious about, I think Frank McCourt said it last week, but that the Web3, some of the Web3 that we're seeing right now is just Web 2 in wolf, it's a wolf in sheep's clothing, because the money grab, the pump and dumps, that's not what it's about. In fact, that's the opposite of what it's about. It's about democratization. It's not about, now some of these things just happen out of experimentation, but it's not about, millions of dollars, spending millions of dollars on an asset. Because not that many people can do that. It's about democratization. It's about bringing everyone in, giving everyone a stake in the thing and a shot to have real ownership and self-sovereign wealth creation.
Yeah, no, I buy that and I subscribe to that. And I think there's two things I want to comment on. I think the first one would be, when you describe this, it's not a zero-sum game like in Web 2. I think one of the other things that come to my mind is the fact that, what if it doesn't have to be that there has to be one quote unquote category winner, right? Because of the promise of interoperability, where you can take your assets and move them around from one place to another, which will really eliminate the value proposition of new platform emerging by owning data and closing their platforms. And I think it's going to open up new opportunities of how do you build enterprise value, and what does enterprise value even mean when you don't need to control the data because you're not selling eyeball to advertisers. And I think that will introduce new business models of how you build great companies. And when we think about companies going public who are Web3 native, what is the exit, quote unquote? Do you even go public? Do you become a publicly traded company, a NASDAQ or a New York Stock Exchange, or are you going to have a different way of exiting? I've heard the terms, exit to the community, where the community owns, either through a DAO or different forms. And so I think there's just so many possibilities here of what a new type of stakeholder internet could look like. And then, I think the other piece is, look, the reality is there's a lot of money at the moment in Web3, and there's going to be even more. And when there's money, there's greed. Where there's greed, there's going to be bad actors. There are still until today in the internet, in Web 2, there are bad actors, right? And I think ultimately, I believe that that's going to be a big learning curve for the space, because in order to bring the first billion people into Web 3 and feeling comfortable with wallets and what does it all mean, I think we're going to have a new layer of consumer application and consumer services that are really helping people feel comfortable in entering the space, regardless of the bad actors. Because, I agree with you, there's a lot of money grab and land grab at the moment in the metaverse and in Web3. But I think it's up to the creators and the builders and making these authentic efforts in building things that are really going to take care of people. And I think there's a lot of questions mark around, what does that look like? When is it going to happen? But some, really capable and brilliant companies and people are working in the space. So, I share the optimism.
Yeah. The more, recent graduates I speak to who want to get into Web3, the more, excited I am that kind of the best and brightest are interested in this space. And that level of energy, I think, is going to end very well.
Amen. So switching gears and talking a bit more about kind of the market's perspective. And, as a side note, Matthew, my co-host on the podcast, who is not with us today, he previously worked at Bloomberg, and he was actually one of the leading people who created the sort of market estimates for the metaverse, which, I believe was something in the range of $800 billion market by 2025, which, I think both of us now believe that it's going to be much, much bigger than that as a wider metaverse economy. But as a venture investor and an advisor to private companies, it might be a bit simpler to take a long view for you as opposed to investors in the public markets. given the turbulence that we've seen in the public markets in the last several months, particularly around metaverse and broadly speaking, high growth technology stocks, does it all change at all your conviction or thesis on the metaverse? And does it cause any reason for you to be even more selective with the way you approach the space and the investment opportunities?
It doesn't change the list of winners that we see so far. Now, of course, that list of winners is always changing, but I would describe it more as they're on sale. I do think that the public markets definitely led the private markets, and we really only started seeing the private market valuations come down very recently. And I think we're going to get some really interesting opportunities. I mean, if you look at, there's a lot of late stage, especially in the late stage, actually throughout the cap structure, but in the late stage space, you're finally getting, I don't know if you saw the Tiger Global news yesterday. They've written down, 50-ish% their portfolio. They're allowing their investors to exit by, a third of their positions, going into side pockets. All of these things are going to, public market investors who have crossover funds are needing to write down their private positions. And I think that this kind of merger of the stages, I think, continues, because you're starting to see more and more people compare these later stage private companies to the public markets. There's still some really good values. There are a lot of great values, but like if you just look at the metaverse, the core metaverse stocks, I think that when we come out of this, we'll be a lot stronger. And we are in a position, luckily, where we have, funds. We have our largest investment is a fund that is invested in Epic Games, and then Discord. Epic and Discord are two. And I tell everyone, Epic and Tim Sweeney are my North Star in terms of business model, because the games are just a demo of the technology. It's really that core Unreal Engine that's so powerful, and then Unity, has the other really strong game engine. And I think the game engine is just going to become more and more and more powerful, because gaming as a backdrop is really, we always say the Trojan horse to the metaverse. And so if you look at those, Roblox right now is trading at 4.5 times sales next year. That's just crazy to me. Unity at 7 times. These companies were at 40 times sales. Now, Epic Games isn't too far off of that on our, from what we can see. And I just think this is a massive opportunity, because we haven't even seen the power of Unreal Engine yet. Unreal Engine 5 just rolled out. We haven't seen the power of neighborhoods and streets within. People think of Fortnite, the game, but what if that's just a backdrop for a neighborhood, and then each street is, they just did a deal with Sony and Lego. There could be a Lego neighborhood. There could be you can run down the street and go to a movie with your friends, and all the things that you could be doing. We haven't even gotten our heads around the power of that. And the power of that new time spent. And I think that the good news is that their timelines have not really been affected by this. They're continuing to build. Unreal Engine 5 was always coming out this year. It was always going to be in build mode for the next year or two. Discord has been growing dramatically. And they haven't even started monetizing yet. They literally, it's like the what they've done with a business model that is just, hey, throw some money my way if you want to support this community or my community. It's they haven't even gotten started yet. So from that perspective, I'm actually really excited, because I think there's some great opportunities out there. And I think that, as you mentioned, some of these companies will hit the public markets, and others that are on the earlier stage that are more token based, may not. And I think that on the token based companies, I'm also really looking forward to this, regulatory clarity that I think is going to be coming out. I think that one great thing about winters in crypto is that a lot of the froth leaves the space, and the true builders stay to lay a very solid foundation. I mean, we've seen this in the past, and I think we're going to see it again. And I think, over the next, let's say it could be 12 to 24 months, we are going to see real progress in terms of how these structures, or how this ecosystem is going to be built, and how the entities can be formed in a way that is regulatory compliant, protects investors, and also provides great innovation, and allows innovation, I think, to stay in the U.S.
So you've said a lot of important things, and I think a great follow-up from that, Angie, would be, Into the Metaverse is currently sponsored by Roundhill Investments, which also has the Metaverse ETF, METV, with the Bold Metaverse Research Partners. What would be your best advice for folks who are interested in public equities or ETFs and want to be exposed to the metaverse, given the environment we're at today? What would be your wisest piece of advice to some of our listeners who are trying to wrap their head around how to approach what you've just described about companies like Roblox, like Unity? Epic is not publicly traded, so harder to get in. But there's a handful of companies that are operating in this space, and to your point, are trading at quite incredible multiples on future sales. And of course, this is not a financial advice, but how would you advise people to just approach the times we're at the moment in the public markets and where these companies are going?
Mm-hmm. So I really need to stay away from financial advice because I'm a regulated broker-dealer. But I would say that the other day I was brainstorming the new FANG, and I was thinking, what will be the new FANG? Where people are not going to be investing. I mean, I lived through the whole, we actually were on the deal when Facebook went public and Google went public, and it was all very exciting. But those companies, the disruptors are getting disrupted. We're seeing it with Netflix as well. And I think the new FANG, I didn't know you were going to ask me this, but I'll tell you, because I've been thinking about this. It actually spells endure. So I know it's dur, which, the derivation of that is a very, a solid base, which I like, which is Discord, Unity, Roblox, and Epic. And the reason I say endure is because I think NVIDIA is on there too, in the front. So those are the companies that I would be watching closely. And, stay tuned. I think, we're advisors to ARK Invest. It's public information, publicly available information that they have applied to the SEC for an interval fund. And I think that will give unaccredited investors access to a mixture of public and private companies. And let's see, they don't have SEC approval yet, but hopefully they will get it. And that's one way to get access. I think they're going to be, just this mantra of, access and democratization to all of these closed door, small groups. Again, it goes back to the zero sum game, theme, which is, I think that's over. And I hate to sound too idealistic, but I really do. I think that you've never seen this kind of a knowledge base in millennials and Gen Z. They are very knowledgeable about markets, and they love to learn. And what is so inspiring to me about Kathy is the fact that she, when COVID hit, she was on YouTube just helping people understand what is going on here and how can we, look at these opportunities and how can we look at innovation. I mean, her mantra and ARK's mantra is they want to be in for 5 years. They want to be in the highest growth companies that will be around as the leaders in innovation across many, subsectors for the long term. And the public markets, unfortunately, because I spent 20 years in the public markets, public market investors are kind of quarterly investors because they're all paid. The incentives are all off. So, I think it was Warren Buffett's deputy who said, show me the incentives and I'll show you the outcomes. The incentives in public markets are totally off. It's invest for the near term, hug an index, don't do anything too crazy. If a company is not in the index, don't even look at it. And that's just not the right thing for investors. And I think Kathy has just broken that seal, and a flood of people are coming in. And guess what? These accredited investor rules are totally outdated. They should be knowledge-based. And so I'm really excited about that. I think it's great that people are taking, again, it's self-sovereign wealth creation. Take your future into your own hands. And I think that continues.
Yeah, I mean, you're so on point, and I think, there are many ways to describe it. I think for me, it's going back to that keyword stakeholder. It's stakeholder capitalism. It's the fact that everyone can share in the wealth creation, and that hasn't been the case for the past 20, 25 years. And I think there has been quite a revolution with regards to access to information and knowledge, not just because of technology company. I think it's also because of people like Kathy Wood, to your point, who operate with a certain level of conviction that I think a lot of people are kind of surprised by, because she's holding forth on her beliefs and the incredible work that her research team is doing. And she's going with her belief on the value of technology and the disruption that we're seeing in the coming decade. And I think that's admirable. And I think we also live in times where authentic voices are important. People want to believe in something. 500 years ago, we had the church. That church is long gone with regards to the grasp that it has on people's day and night and aspiration and view on life. And I think now people are just seeking and craving for those authentic voices. Sometimes it's a brand, sometimes it's specific people. And I think what I'm excited about is this whole frontier is being opened up, and many people can now become a beacon of authenticity and conviction, and really helping people navigate through one of the most uncertain period in history in the past 70 years, I think, with what's happening today. And so I totally echo what you're saying. And I want to repeat what you said about what's the new FANG, and I want to make sure people capture that, because you've described, I love it, right? You've described DURE, which is DURE, which is Discord, Unity, Roblox, and Epic, two of which are publicly traded. And hopefully through special vehicles, people will be able to access the other two as well, which is Epic and Discord. And then you added the N to make it Endure, which is NVIDIA, which, by the way, I totally subscribe to that, because NVIDIA is really a pioneering company with the type of infrastructure. And it's kind of almost like no matter what the metaverse emerges and how it's being built, NVIDIA is going to be right there with the incredible cutting edge technology that they're building as a company to really enable all of these phenomena to happen and exist in the same time. So hopefully you're going to trademark that or do something with it, because I think it's phenomenal.
Well, today is the first day I've actually talked about it. I think I mentioned it to Kathy. I mean, the interesting thing too, we were just talking about the public and private markets. I didn't realize we were going to talk about this, but I do think it's important. We are students of behavior change, and especially generational behavior change. I've always been fascinated with it. I have, I'm Gen X. I've got brothers who are millennials. I've got kids who are Gen Z and Gen Alpha, all the way to, my 10-year-old. And I just have always been fascinated with this behavior shift. And I think a really interesting data point is that a lot of traditional public market investors were reaching out to me when, the day Coinbase was down 20% and some of these big stocks in ARKK were down, saying, oh, is there a rush on, is ARK shutting down? And it's really ironic, because actually an ETF is made up of a lot of investors that have little investments. So it would be more likely that it would be a run on a hedge fund than a run on ARK. But having said that, the day that Kramer on CNBC built a wooden ark and poured Sark whiskey over it. He had the little animals, and And he said, I couldn't believe he said this because it just was such bad karma. He said, there will be no survivors. And I just thought, wow, how awful. How to go on TV and to go on TV as a market, as somebody who's supposed to be helping investors. That's just, entertainment value. And that's, again, like maybe drawing advertising dollars. I don't know.
But it is entertainment.
It is entertainment. That day was the bottom for ARK. The inflows, the ARK has seen 1.7, I think ish. Don't quote me on the number, but close to 2 billion of inflows since that day. And even though the stocks have been down, those inflows, I think, are a lead indicator that tell you that the ARK investors, which are different generation than Kramer and his audience, are seeing something different, which is actually we are investing for the long term here, not for the short term.
And I think a lot of people have been taken by surprise by the positive, by the inflows that are continuing to come into ARK investment funds, despite what's happening in the market. And again, to me, I put that on Kathy Woods' conviction, and I'm just using her as an example to articulate what I've mentioned earlier, which is that there is a new generation, and this new generation, myself included, of people who are investors and are builders who really want to believe in something that has a bit more meat than what we typically see with these quote unquote financial shows, which are really entertainment shows, where it's really about attracting more eyeballs and more advertising dollars to the shows, but you don't stand for anything. And I think ARK is standing for something, and I think some of the companies you've mentioned stand for something. And I think we're entering into that era because of that stakeholder capitalism where, I think the companies that are going to do well are the companies that can authentically connect with their audiences, with their users. And ultimately also, I think because of either the evolution of these platforms or because of Web3 technologies, can also enable wealth creation for customers in a way that's never been done before, which goes back to what we discussed earlier, which is how can brands and companies bring in the customers and turn them from customers to community that can also participate in the upside of the enterprise value. And I think that is a totally new concept. With DAOs or without DAOs, I am excited to see how that plays out and what type of businesses are going to be built. Angie, maybe last question before we wrap up, and we're just on time. So last question I have, alongside your role at Signum, obviously you're also, as I mentioned, a venture partner at Griffin Gaming Partners, which as a disclosure is also a super social investor. But for those who don't know, is one of the premier and the largest VC investors in the gaming and digital entertainment industry. I think one of the things we've seen in the emergence of the metaverse and all of the sort of preliminary applications and platform we're seeing in the space, such as Roblox and Fortnite and others. How do you see the gaming industry, and what do you think the gaming industry needs to think about as they look to evolve their games and experiences into this new era and frontier of the internet?
I think that what they need to think about is kind of gaming first and gamers first. And by the way, I love the fact that gamers is now, the definition of gamers is just exploded, right? It includes everyone, including my mom, who's playing, Mahjong on her phone for a few hours a day.
It's almost like MMORPG went from a video game genre to suddenly the new gateway to the future of the consumer internet, right?
Yes. But I think thinking about gamers first is really, really important because, like I said before, there have been so many money grabs in gaming back, pay to win, advertising, a lot of this early NFT stuff that is not, that is not really authentic. And I think that gamers are really savvy. They can smell a scheme coming from a mile away or a money grab coming from a mile away, and they're not going to have it. So I think it has to be integrated in a way that it is very much, native. And then I also believe in this idea of building social capital in an online space and building identity and social capital that I actually own. And I used to, like when I was in high school, my parents would have dinner parties, and my mom would put china on the table, and there's art on the wall, and you can think of kind of the home as the center of gravity of identity, your physical home, and you can drive your car out of your home, which I think cars in the metaverse are going to be massive, because it historically is a very easily identifiable item of social capital and identity. But you pretty much have the radius around the home as your, the space that you have to build social capital and identity. You can go on trips, you can walk your dog, you can wear certain clothes, drive your car. But in this new world, that old world is kind of the analog on analog world. The intermediary world was the selfie world, or the idea that you can go to Machu Picchu and you can take a selfie, you can rent the runway, take pictures of yourself, and all of a sudden, instead of the home, you've got like the phone is the center of your social capital and identity. But it's still at that point depends on those physical analog items. Whereas in the new world, the digital on digital world, I think I mentioned to you when we spoke before that, my daughter had started, or she had this, or she and her friends had this clothing store in Roblox. The idea that, social capital and identity is being built in these online spaces, I think it's a new, very important concept that we need to get right, and that is important for, to move into this the metaverse space in kind of a real way.
Great place to wrap up. Angie, thank you so much for being here with us today. On behalf of Matthew, who is not with us today, on behalf of Matthew and myself, it was great. I think we covered so much. There's so much to unpack, potentially in future conversations as well. So thank you for being with us today. Absolutely wonderful.
Great. Thank you so much for having me.